new jobs data just in. Are we headed for a painful recession? Bitcoin here, trying to deliver a green candle on the charts. But is this too little too late? You can see Bitcoin rallied as high today as 90,900, tried to reclaim 91k, but then got violently rejected as we got the ADP jobs data. On top of that, you guys know Trump and his tariffs is shaking the market. A lot of pain going on in this market and creating a lot of volatility. We're going to break down exactly what to expect from the crypto charts and how I'm playing this market. If you like these type of live updates as and when it matters, smash up the likes. Do not forget to subscribe. If you actively want to trade with me, you can do so using the link in the description to my Telegram community. Make sure you jump into there. So take a look at this horrible ADP jobs figure. Now remember, this is jobs week, right? And on jobs week on Wednesday, you get the private reading. And then on Friday, you get the more important reading, the one the Fed likes to use, called the non-farm payrolls. Now, they're not always correlated, but one can be a good indicator of the other. And you can see that the number of jobs were estimated to come in at 148,000. That came in at a shocking low, 77,000. Now, perhaps what we're starting to see is some of that hopium around the Trump administration start to wear off, right? You saw some strong November, December data because people were excited. They were like, this whole new era for America is coming. Maybe people started to hire more in excitement. And then when the reality of this post-tariff world started to kick in, you start to see that moving to the other side. So this is a little bit of a worry. Remember, if this jobs figures fall to the downside here, this could create some risk and some uncertainty in terms of whether we're going to get a rate cut, in terms of how hard is this landing going to be. It starts to throw things up in the air. Now, if we jump on over to the crypto markets, we're in extreme fear, which is quite crazy to think that today we hit $90,000 on Bitcoin, and yet we're in extreme fear. Now, maybe, I've been here too long, but I remember days when we're falling down from 69,000 down to 15,500. That's when we deserve to be in extreme fear. To see us in extreme fear here, I don't think it's a function of the fact that the price is so low. It's more that people are worried that we're not going to get an AUK season, and that this bull market is now over, and we're going to walk into a multi-year bear market. I think that's the narrative that's going around right now. I think that's what's creating the fear. Now, I'm going to share my view on how I play this market. Even if I think we're going into a bear market right now, it makes very little sense for me to ladder out of this market right now. If you look at the risk to reward, which of course any good investor does, and please do your own research, don't take my word for it. I am betting on the fact that I expect this cycle to be more powerful than previous cycles. And so far we haven't seen it, right? We ran up here on altcoins to 1.65 trillion. I've shared this with you guys numerous times. And now we're sitting at 1.1 trillion. If we look at the total market cap, we're now below where we were in November 2021. So me as an investor, my job is to look at something and see whether it's undervalued, right? If I'm looking to buy a 2-bedroom house and it's on this really expensive street and it's 60% of the value of all the other ones on the street, I see alpha there, right? I see opportunity. And it's the same with the market. When I look at the crypto market cap as a whole here and see that we're less than November 2021, I want to transport you back to 2021. I want to transport you back to the steepest rate hiking cycle we've seen in a very long time. I want to bring you back to the uncontrollable inflation post the pandemic. I want to bring you back to a government with the SEC chair of Gary Gensler, who was serving notices left, right, center, choking crypto. I want to take you back to the start of last year when you had Signature Bank and you had all these important banks start to collapse under the pressure. Is this a moment to now say, oh, things are bad for crypto, we're going into a bear market? Not for me. We look now at the things working in our favor. You've got a pro-crypto president, albeit I understand that there's frustrations around some of the antics that Trump's been up to. I'm just as frustrated as you guys. But, from a high level, is it better than Biden? Still, right? It still is in terms of crypto, because Biden just didn't care for crypto. It wasn't even on the agenda. At least we got a crypto czar, right? We got a crypto czar. So that works in our favor. New head of the SEC. And more importantly than all that, and I can talk about the fact that we've now got Bitcoin ETF, we've got an Ethereum ETF, we got the Bitcoin Strategic Reserve, you've got governments loading up on these assets. Fine, it's super bullish, but the price is not being reflected, right? And the fundamental reason why price cannot get reflected is price can only, this is really important, write this one down. Price can only follow sentiment If people have money, right? If I'm, think about this, just for you to understand what I'm trying to say here. Let's say I'm sitting here and I'm really bullish about crypto. I'm really bullish. I'm feeling really, really good. And then I'm feeling really, really bad. And then I'm feeling really, really good. Well, that doesn't matter if I have no money to put in the charts, right? It doesn't reflect on the price if I'm just sitting in my bedroom feeling this way about the market. So the sentiment on the charts reflects sentiment of those people with money. Very important. Your sentiment doesn't matter if you're not moving the market right now. And retail right now doesn't have money, right? Retail does not have money, and most people do not have money right now. Yes, institutions are buying. Yes, we're seeing, strategic reserves being built up by countries and people like Michael Saylor taking the opportunity to buy. The average person is not in a position where they've kept enough cash on the sidelines to buy this dip. Yeah, they're not. And that's why you're not seeing a movement. When we start to see global liquidity go up, when we start to see that global liquidity go up, let's see if I can pull up the chart of the liquidity index. When we start to see this thing tick back up, that is where you're going to get explosive mooning period on Bitcoin. Look at this point here. Look at this inflection point back in February of 2020 before Bitcoin went crazy up towards 64 and then later in the year 69. Big injection of liquidity. And ever since this apex point, around that time, you can see here, it was around that Feb 2022 time, liquidity has been coming down. Liquidity has been coming down. It's coming to a point where, we need to see when is that liquidity going to go up. And the liquidity can go up for a few different ways, guys. The first one and the most obvious one, which everybody is looking towards, which isn't giving us much hope, is, of course, the interest rate cuts. Right? If we cut interest rates, if we start to bring the interest rates down, that will play in our favor. That will add more money into the economy, will put more money in your pocket because your mortgage payment has gone down, because your car finance payment has gone down, and will allow you to have a little bit extra cash at the end of the month to vote behind your sentiment and bid up the price, right? But until then, you can't move the price. The other way money can come into the system, like we saw during the pandemic period, was through an influx of stimulus, right? Government spending. Now, right now we're seeing the opposite. We're seeing governments cut back. We're seeing Doge go out there and cut back. Well, I understand the greater mission behind Doge, but you have to understand how it's going to affect the markets. It's going to create unemployment, right? Apparently, it's rumored that 300,000 jobs will be lost by the whole Doge cost cutting. That's real people with real jobs, some of which would have been buying crypto, who may have to sell some of their crypto, will have to find a new job, etc., etc. Less liquidity in the market. On top of that, the predictions are that for every one job being cut in government through the Doge process, 2 contractors will lose their role as well. So 900,000 people likely to be affected by this, who will then have to need to go find new work in a tough economy, in a tough market. So when you look at this, it's hard to understand where's that liquidity going to come from. So we either need to see interest rate cuts, we need to see government spending, whether that's a Doge stimulus check, whether that's government printing money, whether that's infrastructure projects. We need to see money start to go back into circulating supply, and then we're going to see the powerful move on Bitcoin. Very, very quickly here, pull out the EMA ribbon on Bitcoin. It's a move into the EMA ribbon on the weekly chart. I have no reason to panic here. Last week, the dip got bought. This week so far, the dip has been bought. You can see the deeper we go into the CMA ribbon, you start getting these wicking candles because people are ready to buy the dip. When the price started turning over at 109, I called this, guys. I said at that point, get ready for a pullback to 72 to 74. We got close. We got down to 78, I believe, last week. Let me just check. Yep, 78 last week, because I said this is where I'm buying the dip. And I drew it here. I said in the EMA ribbon, at the mean reversion is where I want to buy the dip. I don't want to buy at 109. I buy from positions of strength. And that's what a lot of smart people are doing, right? 109 is all the way up there. If you're buying at the bottom of the EMA ribbon, you're buying at 30% retracement. If you're buying in the middle of the EMA ribbon, 20 to 25% retracement. If you keep doing that over a long enough period of time, you get a really low cost basis on some of your favorite cryptos. Very quickly here on S before we wrap up, you can see another tough weekly candle here. Of course, the market is just pulling back, right? And that's the problem here. You can see below the weekly EMA ribbon, and same for Bitcoin, right? If you jump onto the daily chart, you can see a couple of days ago when Trump announced the Bitcoin strategic reserve, big move, and then dumped the next day straight back down again, right? Getting rejected by the EMA ribbon, bunch of liquidations, and now we're trying to work our way back here. But there's still a lot of resistance here from the EMA ribbon. So I continue to be prepared for 72 to 74 range. If we get down there, if we come down to this yellow line, I would love to buy the dip here. I already start nibbling in these areas, but I'll be buying a lot heavier around this area on Bitcoin, ETH, and some of my favorite altcoins. Hopefully you guys found this update useful for that type of content. Smash up the likes. Do not forget to subscribe. Don't forget to download my free crypto exposure blueprint. I'm going to leave the link in the description. It's a PDF which walks you through how the real wealthy build money in crypto. It's completely free. Links in the description. Go check it out. Thanks for watching, and I'll see you in the next one.